Hello everyone, this is Teddy Kekstadt from Forex Trading Unlocked, and we're here with a Forex market breakdown for you. And today we are going to discuss all kinds of economic numbers and other things. But before we do that, we want to get through our disclaimer. And here's the Nadex disclaimer. And just we're reminding you that this webinar video is for informational and educational purposes only. So with that, let's jump into what we need to talk about first. So our economic calendar this week actually has a lot of key things coming out today and tomorrow, and especially on Friday. So for our major currencies, we have all kinds of big type of three-letter economic numbers that are coming out. That's when you know they're big. So we have for the euro, we have the German PMI. We also have for the EU PMI and retail sales today, and as well as for the US dollar, we have PMI. For the British pound, we have PMI, and then for the Australian dollar, GDP, and for the Canada, we have the Bank of Canada Monetary Policy Report and rate decision coming out today. So that's a lot of heavy hitting. Obviously, PMI is the main driving number in multiple currencies. So all major currencies as well. The rate decision for the BOC, that's also something that is, especially for the Canadian dollar, obviously very important. So we'll take a look at that, how things are shaping up. And then also we have for the Australian dollar on Thursday, we have exports and imports. This is really big because we've had a lot of Chinese numbers that have come out over actually today, yesterday, and over the past week that have beaten expectations by many of the gurus. Right now, I think everyone's on such the recession bandwagon that they're purposely, or not purposely, but they're missing the expectation numbers because any type of positive surge in anything obviously throws off the expectations. We have for the Swiss, the GDP also. So that's kind of big for the Eurozone. So we'll take a look at that as well. And then we have the British pound. We have the UK hearing on no Brexit deal tomorrow. We've been talking about for weeks out. September 1st was the first deadline towards the approaching Brexit date of October 31st. And in the first few days of September, they have been very busy over across the pond in the UK. Boris Johnson, definitely this guy is full throttle, and things have been very active over there over the past few days. We'll see how the hearings get through today, as well as how the reaction is to that. And then Friday comes the big numbers. We have for the euro, we have industrial production. Remember last month, the industrial numbers in August as well as July, they came out, all the different economic, industrial, and production numbers came out like earth-shatteringly poor. We knew there was a slowdown in the EU, but there was some, they just rocked the consensus for the economy over there. So let's see if there's an uptick on Friday. And then for Canada, we also have the employment number. The US dollar, we have our employment number in the US, and then for the JPY, we have the leading economic index. This is kind of an important number as well, so we might have some, after today and tomorrow, especially in Thursday going into Friday, we might see a little bit of neutral trading going on. So with that, let's take a look at our first market. So first we're looking at the US dollar Canada. So what do we see here? We see that I have this big circle called the chop zone. If you look at that green horizontal line here, we have at $1.3345. We have, that's probably where you're going to probably see some bullish momentum build if the market can get above that and settle above that. Right now, the slope of this current rally in the US dollar Canada has been fairly steep, but not overly steep to where you would look for a lot of volatility. Now, if you look at these, the latest trading over the past few weeks, the market is more in a sideways trend than it is in an uptrend. Yesterday, we spiked a higher move high, which is obviously a bullish sign for the trend in the market. However, today we are, as this slide is actually pretty recent before this webinar, we're showing that the US dollar Canada is sliding a little bit. So dollar weakness in front of these Canadian numbers that are coming out. So it'll be pretty interesting to see if the trend will be supported by these numbers or if it's going to start to fall back. Most likely, if the numbers are very positive, we may brush these highs. If you can see how this has been over the past few weeks here, there hasn't been much of momentum as far as pressuring resistance. It's been just bucking up against it. So that's why we have this green horizontal line at $1.3345. So I think above that, we can start to see that strength in the US dollar will be continuing to overwhelm the Canada. But below that, not that I'm bearish, but I think that you're probably going to see more of a chop zone kind of trading. Like I think that just by attrition, we can cross over this upward sloping blue line, which is holding up the trend right now, and then probably settle into a sideways trade. So now why a sideways trade? Well, let's see what's going on with the dollar as far as the other major currencies. So the question is dollar strength globally going to continue to rear its head, or is it going to start to fall back as we are entering into the fall, no pun intended. And especially with Brexit coming up, I think that a lot of the major currencies, especially the dollar, are going to start to, while they may have intraday spikes and have their little moments with the economic numbers, I think that trending possibilities are going to start to subside over the next month as we head into October 31st. We'll take a look at these other markets and you'll start to see where maybe the dollar bull may not necessarily become a bear, but it might be time for a little bit of digestion that will hit all of the major currency crosses. So right now, key off this $1.3345 for upward and downward bias. I think that below this this pivot here, you've got the range trade down to $1.3225, which is where we have this little purple line coming off of the most recent higher move low. So now that's the thing to remember is that we've made higher move highs and higher move lows in this market. So there's no reason to be a bear right now, unless you are an aggressive, short-term bear. Then I would say you got your risk above where the higher move high is, and your target would definitely be at where that last higher move low is, where the upward sloping blue line comes in right there on that low. So that level there at $1.3225 probably will be a very good support level for the next, I would say, as we move into September and start to head out of the third quarter and start to move into the fourth quarter. So now let's look at our next currency to see where dollar strength or dollar weakness is prevailing. So we're starting to see possibly maybe a little short-term pause in dollar strength against the Canada. Now let's see what we have in the euro. We have a short-term reversal signal that was yesterday where we made a lower move low. So the trend is still overall bearish, and with the spike low and positive close yesterday, and you can see today's reaction to the numbers that already came out. Remember, we're talking about German PMI and retail sales. Well, ironically, certain numbers actually beat expectations, giving strength, a little lift to the euro. Is the euro US dollar going to start to turn? Probably not. The trend is your friend, and we finally started to press this lower extreme here. You got to remember the euro US dollar has been trading sideways now for well, the whole summer and the whole year, and now we're finally starting to fall back onto support and start to press newer move lows, where it's been so hard to get below this $1.10. So if you look at this green horizontal line here, that is a big directional pivot, because $1.10.53, basically $1.10 to $1.11 has been the support in the euro for the whole year, and it's definitely a weak indication for continued bearish trends to continue in this market over the next few weeks, especially as we head into Brexit. The euro versus the pound is not as strong as a bull as it's been for the past year, especially in the past 6 months. It's starting to lose its strength. And the euro against other major currencies as well has started to lose its strength. So right now, this most likely we're setting ourselves up for a short-term correction. With this bullish surge today, especially if we have some more complementary numbers tomorrow for that would be negative dollar and potentially stronger the euro, then a challenge of that $1.1053 by sometime tomorrow is not out of the realm of possibility. Now, if we would have higher volatility that the euro US dollar is pretty much used to having, I would say that we could possibly challenge that level definitely within the next session or so. But lately, especially over the past 4 and 5 months, there's only been a few days where you've had like a full dollar range or more. For the most part, you're lucky if you can get a half a dollar range in the euro US dollar. So expectations for bulls and bears right now should be definitely in check. And I think that to the downside is where you have more momentum and ability, because the trend is your friend. So if you're a bull right now, I would say you must be in a very aggressive posture and definitely key off of yesterday's low. Anything below that, I think you're a rock on falling in the water. It's just going to keep on sinking until it hits bottom. So we're pressing support where we haven't been in a while in the euro US dollar. So this signal right now, that's why we have a question mark. If we were in a different environment, especially if we were, let's say we were in an opposite trend, if we were in a bull trend and we were just coming off of a short-term break like this, and this was just a correction, then I would say this signal probably would have more validity. But the fact that this is not a correction that we're in, this is actually a bearish trend, the euro US dollar, I would be very careful with the long side. And then we have this downward sloping blue line where that trend has been pretty solid. It's not very steep, and it seems like the market definitely wants to continue to buck up against it and then fall back down. So that green level at 110.53 area up to 111 is probably the extreme of any type of upside action. So that would still be a nice little correction. It's a nice little play to the upside. But then I think the bears are probably going to maintain their positioning as far as momentum, because remember, this whole Brexit thing is now coming to a head, and before, where the euro had been strong, I think that with the wild Boris Johnson and the things that he's going on, we talked about last week about him proroguing or suspending Parliament potentially, and this week, September 1st, which we spoke about, was the beginning of the Brexit deadlines for things. Today they have meetings about Parliament, and yesterday they had brought out already where Boris Johnson was ready to start. I don't know exactly how their system works, but I guess he can suspend certain parts of Parliament already. So it's going to be very interesting to see what happens there, and there's definitely showing some strength in the pound. So that being said, US dollar strength right now, it looks like it's going to be a little weak with the short-term reversal. So let's play with that right now, that at least on the daily basis, we're starting to show dollar weakness. We're seeing it in Canada, which is one of our lesser currency crosses, and now we're seeing dollar weakness in the euro US dollar. So at least short run. So we have two currency crosses where dollar weakness and the other cross is showing strength. So let's look at the GBPUSD. Now this one here, this is where it's really interesting. So we have two European currencies, the euro and the pound, that spiked low yesterday. So they continue to maintain their bearish trend with making a newer move low. This is a bearish sign. So always remember, the trend is your friend, and those basic fundamentals of higher move highs and higher move lows, or lower move highs and lower move lows, typically are things that you need to be aware of, especially establishing key pivots. So that being said, we have the low purple pivot off of yesterday's low at $1.1956. Now there's a lot of talk about parity. Now, usually when we talk about parity in the currency markets, the Forex markets, people usually just make an assumption that it's the US dollar Swiss, but they're not that's not the only currency cross under the sun. We all know that. So now the big pundit gurus are talking about, and I've heard a lot over the weekend, that no matter how Brexit goes, that the pound is going to be at parity with the dollar. I would be very cautious of that one. I've heard a lot of rumblings and did some readings on it over the weekend, and I understand where people are getting that kind of theory and what have you. However, been watching the pound for years and trading it for years, and I think that now we are in a bear trend. But to make a call like that, you're looking for still another $20 handle move in this market. It would take a big surge in the dollar against a lot of the other currencies, I think, to really support that idea of a trend like that. So that short term. Reversing gears, we have a question mark on this one too. So I think that with today's surge, you can see how we're just ready to press up against the downward sloping trend line that has been keeping the British pound US dollar bears in setting their direction, which is not too steep either. So now by attrition, we can come through that. Like we may be in a digestive phase coming up because the pound might be not necessarily turning, but it may be bottoming. As we head into this October 31st deadline, you can see that it's been very choppy between these two green pivots of $1.2042 and $1.2308. That may contain the range for the next month and a half as we head towards Brexit. We may start to just kind of chop around there, where we may start bucking up against 123 and then come back down. So right now for the pound US dollar, I think short term, you have some very good bullish capabilities. Obviously, we've had an explosive move today. Be careful about that. The pound, when it moves, this could be the beginning of a lot of explosive moves, or it could just be today's action because of all the numbers that are coming out. But tomorrow, we also have that. We have a couple numbers that could be important because of the UK hearings for a no Brexit deal, how to react to that. So it's very interesting. The pound may start to swing around on a daily basis, where it's kind of like today it's very bullish, the pound. Maybe it's because the dollar weakness is starting to show its head in the other currencies. So maybe the pound is getting a lift from that. It's very possible. But remember, each day they're addressing Brexit. So between their economic numbers and what they are and what they are not able to accomplish each day, may cause the pound to have knee-jerk reactions, where after a day like today, let's say we settle where we are right now this afternoon, we could see it come back and just be a little range trade lower tomorrow and then chop down into Thursday, into Friday, because we have some big numbers, and then, we start to catch a rally again next week, and just start to just churn around in this area between $1.2042 and $1.2308, the two horizontal green pivots. Now, a rally above $1.2308, this gets back to our fundamental higher move highs and lower move lows theory. If we get a breach of $1.2308, that means higher move highs after establishing a lower move low on the major trend. So that could be the beginning of a bullish turn. We don't want to try and pick a bottom or a top. We never want to do that. But if we get a situation like that to occur over the next couple days, then we have a very good indication that the pound may be in a range trade to higher mode over the next few weeks, month and a half, as we are actually, well, not quite 2 months, as we go towards the Brexit deadline, which is October 31st. So Halloween may be quite the party for the financial markets. It'll be very interesting what's going to happen as we unfold here. So for some plays here, I think for range traders, you got some good levels here to key off of. Those green pivots, because one would be a higher move high, so that's a great breakout area to begin with on multiple levels. It's not just my prognostication; it's fundamental theory that just it typically is a good place to find buying momentum or selling momentum. Now, obviously, for the bears, I think that unless you can get the market back below $1.2042, that lower green pivot, we are in a short-term bullish posture. So it's going to be a little tough. But if you're an aggressive bear and you don't think that this market's going to take off, and you think dollar strength is going to rear its head, and that's the thing is today we're looking at dollar weakness seeping into the market. So we could just be having this little upside reaction today. Tomorrow, with all these economic numbers that are coming out, if dollar strength starts to rear its head and the dollar index starts to explode and starts to pressure resistance, we all know that the majors like the pound, the euro that we just looked at, and even the Canada may start to reverse gears on their current 2-day trend that's starting to establish right now. So that being said, key off those green pivot lines there. Now you notice that one last mention here about the pound US dollar. if we get a rally above $1.2308, that next pivot, $1.2386, is a big momentum area. It's very possible to see a little pause right there, but the breach of that area, that would be a very big bullish indication that we either have some really major news going on in the UK that is affecting the pound, or we really have dollar weakness that's starting to seep into the marketplace. And it's not unlikely for us now that as we head into the last 3-4 weeks of the third quarter, that we may start to see a little bit of dollar weakness as a lot of numbers start to come out, as well as companies are preparing for the fourth quarter. So a lot of companies are on cyclical patterns with buying and production and things like that. So it may, as we wind down and head into Brexit and the end of the third quarter, we may start to see some interesting balancing of currencies. Now let's go on to our next major one, because this is where we start to look at US dollar weakness. We've seen US dollar weakness short run as yesterday and today, where we have multiple currencies that, excuse me, has set a spike high or spike low, where we have the dollar now being weak against those currency crosses. So here we are, we're looking at the Swiss. Now last week we were looking at a big rally that had that started to unfold, because we had a little bounce, and we can see that last week, or a week and a half ago, we set that higher move low, which now we've rallied into yesterday's session that set that bearish engulfing line. So there's a high probable Japanese candlestick pattern. Now we had a couple reversal signals, so now we have a sell signal in the US dollar Canada, we have a buy signal in the Euro US dollar, we have a short-term reversal signal in the British pound US dollar. So those are three major currencies that, at least in the short term intraday past couple days, are definitely rearing their heads for dollar weakness and other currency cross strength. This would also be the case with the US dollar Swiss. Now, since this is a bearish engulfing line, that puts the that target range right there, that gives the focus where over the next few sessions we have a good probable chance of starting to test support there. So the key pivot right there is, right now the market obviously is lower. This slide is from right before this video started, so I would assume that since the US markets haven't opened yet, that it's probably right around where it's at right now. So now remember, we have a Swiss number coming out tomorrow. So right now I would think that as we trade today, unless there's any reason for the dollar to reverse gears and something comes out bullish the dollar, I think that we'll probably keep laying on support into tomorrow's session. Now then, there's the number that comes out for the Swiss. Now GDP and all these things have, the European numbers for the EU have not been meeting expectations because they've been downplaying them. That's something you're going to find that's going to definitely be the prevailing mood for the next, until a recession comes, because we have all the chicken littles out there. I mean, if you say recession's coming long enough, eventually you would be right, just like any type of turn or market event. But right now we have no reason to. Let's look at the realities of the numbers, and they have been beating the expectations, especially in the EU. The Swiss, unless there's a major shift in their GDP number that comes out tomorrow, I think that you'll probably find a reinforcement of bearish momentum for the dollar and strength in the Swiss, at least for a follow-through move to maybe get us down into this target range and hit maybe into that area of the 97 area, or maybe that's probably about the extent of a break. If you look at this target range, it comes into the upward sloping support line for the new trend, which right now the market is in a current bullish intermediate trend. So right now we're looking at a short-term bearish correction, not a turn in the market. And that's why I think that target right there, if we fail the 98.27, that first purple pivot line tomorrow, or today especially, then we were only a blink away from the target, the heart of that target range, which is 97.97. Once we get into that area, I don't think you're going to keep on pressing extremes. I think that it will start to either digest and go sideways, or by attrition eventually bounce off that support line. That's if the trend is your friend, and that will be maintaining. Now, if we have a true turn in the dollar that's occurring right now, then that's a whole different scenario. Then we're looking at taking out that lower 97.65 pivot, at which point then we're targeting that last higher move low where we have the upward sloping blue line second point from. So if we get down there, then what would that mean? That would mean that we have some serious dollar weakness going on. At that point, you would probably, this is why we're looking at these currencies to get the relationships. Usually we look at trade zones, like we would look at the Swiss, the euro, and the pound versus each other to try and get a signaling here. But right now we're keying off the dollar with all these crosses. And this is a big deal because usually we have markets, even though they're not in tandem, or they may be divergent of each other. Right now we seem to have all of these major currency crosses doing the same thing versus the dollar. So it's going to be really interesting to see how the dollar index reacts throughout the rest of the day today. And that's another thing to look at. If you key off the dollar index and it continues to be looking like it's riding support today, then I think you're probably going to see markets that we've talked about right now, the US dollar Canada, the euro US dollar, the euro the pound dollar, to continue to be strong, and US dollar weakness to prevail for the rest of the day into tomorrow's session. So that being said, right now, the high from yesterday, where this bearish engulfing line pattern sell signal emerged, I would say that that is your definitely your line in the sand for bulls and bears. Because if we get a rally that turns around and takes out that high, well, we're making higher move highs, bullish fundamentally. And that also means that the sell signal would be negated and also fail. And so that would mean that we have some very strong strength in the US dollar as well, or some major weakness in the Swiss. Now, here's the one thing: of all the currencies we talked about today, what are the odds that the Swiss are really going to shake things up? The last time they did was when they said they were going to stop supporting the euro. So that was over a year ago. So they do make moves, and when they do, they're radical, or they do shake up the news because they just come out and do it. The one thing that you can count on about the Swiss, besides having good skiing and making good watches, is that they have no problem with short-term pain for long-term gain. Like, they will definitely, I mean, the last time they made a move, they took out, what was it, close to $2 trillion out of their market within just, what was it, in a couple hours. It evaporated. So if we did that in the United States, we'd probably have people panicking in the streets, which most people don't realize how they're not affected by a move like that. But long-term, it paid off. So that being said, I think, unless we have an event like that, let's just go with the Swiss being steady eddies and maybe hit that target range and then start to be neutral, because we want to see if there's a real turn in the dollar happening. Now, if we do continue down to that support area and those other markets we talked about continue with their momentum, then obviously the dollar index would most likely be decreasing, riding support, which would be reinforcing these trades. Now, here's where we have the counter trade. You can't always be riding against the dollar, right, folks, or riding with it. You got to have something that goes different. We have some very interesting things that have come out recently in the news, besides what we talked about earlier with the parity with the pound. The Bank of Japan becoming hawkish. I read some stuff about that and heard some things where there's a consensus amongst some gurus about that the Bank of Japan is going to start to fall in line with the rest of the central banks. I really doubt that. They've been riding this storm for almost 30 years, for Christ's sakes. I don't think that they're going to deal with what's going on in the economy or the world the way the other central banks are right now. Especially, we had positive numbers out of China. Now, these were not Chinese numbers. These are numbers that we know are good because of the other countries that gauge these numbers and get the actual true values of trade for export and imports coming in and out of China. So that being said, it was very bullish for China, which is also bullish for the Australian dollar and also for the Japanese yen. As far as the economy, as far as being active in production and manufacturing. So as far as recession fears, it does help to minimize those because those are being imposed heavily on those markets, at least in the news. Now you can see that we had a little over a week and a half ago, we had a bullish engulfing signal in the US dollar JPY. Now this market has been in a bearish market, just like the US dollar Swiss, for quite a while. In fact, the Swiss and the JPY have been the two crosses that while the other ones have been weak against the dollar, these two have been strong, even in the midst of the global turmoil as far as recessions and the trade wars and what have you. The Japanese yen has been strong, and the Japanese yen is strong against other currencies as well. However, maybe U.S. dollar weakness U.S. dollar strength is starting to finally rear its head. Well, is it U.S. dollar strength? We looked at the other currencies. The U.S. dollar strength doesn't seem to be there. So what is causing this rally? It's probably a corrective phase for the Japanese yen, I would say. So we have this bullish engulfing signal that came out a little over a week and a half ago. So what's happened since then? Well, we had a little rally. We've fallen back over the past couple sessions. Today, the market's strong. It's liking what's happened with the Chinese numbers. So if we look at yesterday's low and look at that as a higher move low after falling back for a couple days, let's see if today's rally starts to really get some momentum. So if you see right above the high of today's bar, this chart is from just before this video, we have a pivot at 106.316. We have a directional arrow then pointing towards that green horizontal line at 106.887. That is a crucial resistance area that if we can breach that, the momentum of higher move highs and that bullish engulfing signal would then mean that with the odds of us hitting that target range and pressuring that 107.447 area are very, very probable. Now, anything above that target range is in between two big pivots there. I think it's going to be hard to get above that 107.447 level, just because the only way I see that really maintaining a big rally up to that area would mean you'd have to have a lot of US dollar strength coming in or yen weakness. Now, we looked at those other markets. If the trend short run, especially pressing into the next week or two, it starts to show dollar weakness, meaning strength in those other currency crosses we spoke of, it's going to be really hard for the US dollar yen to get much higher than that 107.447 area. So that target range, I think we have a good shot at nipping it in the bottom area, a part of that range, especially if we get above 106.887. We're looking at higher move highs. That bullish momentum right there probably will build enough, be enough to get to touch that spot. I don't know if we would be able to maintain the trend. So that's going to have to look at how the numbers come out and see how the trends in the other currencies start to shake out as well. But yeah, there's a very good chance that it could go up to there. Now, yesterday's low, that's for you bears to key off of. If we fall back on that, then we're looking at that 105.606 pivot, and that's a directional down pivot. And that means that this bullish engulfing signal that we had did all it could just to lift the market into a range trade before the bears start to jump all over it. Now remember, US dollar strength has not been in this market for quite some time. So for this market to fall back on itself, I think that if you're a range trader or an aggressive bear, you key off those purple pivots right now, and you got a good shot. We could be contained. Like today with the market where it's pressing the highs, we may stay within the range of yesterday's trading and start to go sideways. I mean, if you look at where we've been for the past month, we've basically been trading between 105.606 and this 106.316 pivot. So if that's the case and this market's more going sideways, then which is very possible. So this BOJ hawkish stuff, like unless we start to see that really rear its heads and the BOJ starts to change its stance, which it's been pretty rock solid on, then we might start to see a total change in the US dollar Japanese yen overall trend. But right now, remember, the US dollar Japanese yen is in an overall bear market. Long term, intermediate term, short term, it's sideways, trying to make a little rally. So key off those pivots. So if you're a bull, 106.316, looking for a challenge of 106.87. And then if you're an aggressive bear, if this market's going to be range bound, then 106.887 is a good reversal level to look for. But I would say most likely contained down to that 105.606 pivot. So with that being said, I want to thank you very much for your time today. Do your homework, look at the markets, please weigh your potential trades, have a plan and stay the course. Pay attention to those numbers coming out over the next couple days. I'm Teddy Kekstadt from Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com. Please like, follow, and share my links and information on Twitch and StockTwits and LinkedIn, if you will. And if you want to learn more about those signals that we talked about in a couple of those markets, I wrote a book called High Probable Japanese Candlestick Patterns that's available on Amazon.com. You can get it on Kindle version or paperback, or if you are a Kindle Unlimited member, you can read it whenever you want. So check it out. To utilize the best buy and sell patterns used for over 400 years, give yourself a competitive edge against the markets. With that, I want to say thank you very much for your time. Teddy Kekstadt, you have a great day.